What's up everybody, Steve here. I came across an article on Market Watch. I will provide you guys a link below for you guys, but the title of this is Billionaire Investor Ray Dalio on Capitalism's Crisis. The world is going to change in shocking ways in the next 5 years. Look, Ray Dalio, he is a billionaire. He was the founder of, I think, the largest hedge fund, Bridgewater Associates. And this guy, as well as other guys like Warren Buffett and Peter Schiff, I've been following for a while. And these guys, they are professionals when it comes to predicting, not necessarily predicting, but studying trends and successfully studying trends, whether that's economic forecasts or whether it's certain businesses and acquisitions. So these guys, I mean, they're very successful in what they do in studying trends, and this article really did it is a little scary, it's a little intimidating for the United States and what's to come. So I do want to read parts of this article, so let's just jump into this. So it goes on to say, Ray Dalio predicts life in the US could become more difficult, mountainous debt that stunts economic growth, fewer opportunities for ordinary citizens to get ahead financially, and a worldwide lack of trust in the US dollar that diminishes Americans' purchasing power and could lower their standard of living. Look, we're going to talk a little bit as well toward the end of this video in terms of what you guys could do to hedge yourself in a situation where the debt bubble and the devaluation of the dollar, in terms of being able to kind of protect you and your assets and your family. He goes on to say, capitalism also produces large wealth gaps that produce opportunity gaps which threaten the system. Unless the US takes systematic repairs designed to improve greater opportunity for more Americans to achieve personal growth and financial security, the consequences likely will be painful for the country. And then he goes on to talk about the 3 problems that are coming together. What's going on is an economic downturn together with a large wealth gap and the rising power of China challenging the existing power of the United States. It's a fact that there has been a weakening of the competitive advantages of the United States over the last couple of decades. For example, the United States lost a lot of education advantage relative to other countries. I mean, look at our education system right now and what they're teaching and trying to rewrite history and all this bullshit that's in our education systems. I mean, it is unfortunate, and even on the college level, we're really not doing what we need to do to have a competitive advantage against China as well as a lot of other countries. Our share of world GDP is reduced. Basically, what we're producing, we're more of a consumer nation. We're not producing as much as a lot of other countries right now. The wealth gap has increased, which has contributed to our political and social polarization. In innovation and technology, the United States is still the strongest, but China is coming on very strong and at existing rates will surpass the United States. Military, the US is stronger than China, but also China has come up on very strong, is probably stronger in the waters close to that country that include Taiwan and other disputed areas. Finances for both countries are challenging, but for the US more so. The US is in the late stages of a debt cycle and money cycle in which we are producing a lot of debt and printing a lot of money. Excessive debt can be a killer for businesses and families, but most people don't seem to recognize that debt plays havoc with their country's finances as well. Government runs the printing presses, which buys time, but eventually something's got to give. And unfortunately, history does repeat itself, and what we can learn from history, he goes into talking about what we can do to look at history. So for example, the Dutch Empire, the British Empire, both experienced the creation of debt and printing of money, less educational advantages, greater internal wealth conflict, greater challenges from rival countries. Every country has stress tests. If you look at the British history, the development of rival countries led them to lose their competitive advantages. Their finances were bad because they accumulated a lot of debt. So after World War II, those trends went against them. And it goes on to say these diseases almost play out the same way every single time. And understand something, the United States is pretty short-lived when we really think about it. The United States' relative position in the world, which was a dominant in almost all three of these categories at the beginning of the world order in 1945, has declined and is exhibiting real signs that should raise worries. The United States is a 75-year-old empire and is exhibiting signs of decline. If you want to extend your life, there are clear things you can do, but it means doing things you do not want to do. And right now, with the amount of printing and the amount of stimulus and everything that they're doing, they're really just affecting our future. And if they turn off the printing machines, we will feel it immediately, and that's why they're not doing it. But unfortunately, kicking the can down the road is not going to help anybody either. So he goes on to say capitalism versus socialism, and positions this in a really easy to understand way. So capitalism and capitalists are good at increasing productivity to increase the size of the economic pie, but they're not good at dividing the economic opportunity pie, meaning where there's a big gap between the poor, middle class, and the rich. Socialists are generally not good at increasing the productivity and the size of the economy opportunity pie, but they are better at dividing the pie. So the socialists are not working on expanding the economy, and we're seeing that right now in 2021. Our economy is not expanding. We're just printing so much money that's just kind of keeping us at a level keel, but we're not expanding as a country. We now have too much emphasis on distributing wealth and getting it from producing debt and printing money, and not enough from increasing productivity. Wealth cannot be created by creating debt and money. The system needs to be re-engineered, but if we don't do this engineering well, we're going to spend into an unlimited way and deal with that creating debt that won't ever be paid back, and we risk losing the reserve currency status of the dollar. If we get into that position, and we're very close, things will get much worse because we are living on borrowed money that's financing our consumption. And this is where things get kind of scary, because he's predicting that we're not 10 years out, we're not 20 years out. He's predicting in the next 5 years, we could see a situation in which foreigners who have been lending money to the United States won't want to, and the dollar will not be as readily accepted for making purchases in the world as it is now. We have to realize that we're spending more than we're earning. Every individual, every company, every country has an income statement and a balance sheet. And, unfortunately, for whatever reason, whether it's on a local, state, or federal government, why do we not have balanced budget measures where whatever you're bringing in is what you're investing, what you're spending on your government? Unfortunately, we don't have balanced budgets or balanced budget laws in most territories, so most governments are over leveraging, or they're not bringing in enough money to basically pay for their expenses. The United States is running a deficit to the rest of the world that is financed by borrowing money, so that we are producing liabilities. If the US loses the ability and it doesn't force itself to be more productive, one day it will lose that ability to borrow, and then we'll have to cut spending, which is painful. And the amount of spending that's going on, look how big our government has grown on local, state, and federal levels. It's disgusting. It's a lot of wasteful spending. When that pain happens at the next time, when you have a population at each other's throats over money, that's a toxic combination. People can't take the downturn and ultimately have less buying power. And the value of the dollar, it is going to be jeopardized, and we're not going to have the purchasing power that we once had. And also we have inflation as well going on. And I know the last time you've been at the grocery store, I'm sure it was an easy $100 for basically a few bags of groceries. And people that are really on tight budgets, they're not going to be able to keep up with that. And this is, I think, just the start of really, unfortunate circumstances to come. So the person interviewing asked Ray Dalio, what would be a smart, proactive strategy for investors to both protect a portfolio and take advantage of market opportunities? And Dalio responds, First, worry as much about the value of your money as you worry about the value of your investments. I'm gonna repeat that because that is important. First, worry as much about the value of your money as you worry about the value of your investments. The printing of money and debt should make you aware of that. That's why financial asset prices have gone up like stocks and gold, because of debt and money creation. You do not want to own the thing you think is the safest, and he says, which is cash. Now, even right now in 2021, I had certain properties that I own on the market for sale, and I think that they would have sold. But the problem is I don't want to be in such a large cash position. Granted, I do want to have a healthy cash position because I think that there's going to be a lot of deals to come in the future, unfortunately, or fortunately, depending on what side of the spectrum you're at. But I didn't want to be in a huge cash position where if something does happen with the dollar and the value of it decreases tremendously, or I just didn't want to be such in a big cash position. So I'm going to remain with certain real estate assets and keep them, as well as other assets. But I do have a healthy reserve of cash on the side for when deals are going to hit the market, because I think a lot more deals are going to hit the market. He goes on to say, second, know how to diversify well. That includes diversification of countries, currencies, and assets, because wealth is not so much destroyed as it shifts. When something goes down, something else goes up. That's kind of like the yin and the yang. You always have if there's a reaction, you always have an adverse reaction. And I think that's important to understand as well. And me personally, I am studying more abroad. I'm studying more of real estate assets in other countries as well, because I do want to diversify my portfolio and not be all bound to the United States or the US dollar. And then finally, he goes on to say, Americans look at the value of everything in the US dollar, but they don't look at the value of the dollar. Again, I want to repeat that. Americans look at the value of everything in the US dollar, but they don't look at the value of the dollar. You're in an environment where you have to be cautious about that, because the easiest way out for government is to do what the US just did, which is to borrow and print a lot of money. Now, again, we're talking about a billionaire that really understands trends, and this article, again, I'm going to put a link down below for you guys, is a bit scary. It's a bit of an eye-opener, and it should be an eye-opener for a lot of people. And essentially, the value of the dollar is anticipated to reduce. So your purchasing power, if you're gonna go and buy something for, say, $100, that purchasing power may not be $100. You may be a value of $70. And if things can continue on the decline for the dollar, that dollar could be worth 50 cents or 40 cents. So who knows what's going to happen in the future. I think that there are ways to protect yourself. One thing that I've been concentrated on for a long time is becoming debt-free for personal liabilities. There is good debt and bad debt. The good debt is taking debt that is going to make you money, like an investment property, and the bad debt is pretty much anything else that's not making you money. So I highly encourage you guys to get out of debt as quickly as possible before things implode. And I did another video on this in terms of really getting out of debt and becoming financially free. And if you guys can achieve that, if you can become debt free, and again, I did another video too on the benefits of becoming free and clear on the home that you live in. You might want to check that out as well. But I can tell you, if you guys are in that position, you'll probably have nothing to worry about, because you're going to be in a debt-free position, and there's going to be a lot more opportunities that are going to come to the table, and you guys are going to be ready for it. So anyway, check those videos out at the end, and I'll see you guys there. Thanks a lot for watching.